This is Professor MoneyPigTrading, a former AI researcher, now a data scientist and trader. And today we're going to talk about the episode 3 for how to trade options. And basically the strategy we're going to discuss is sell options, and basically has a limited risk, but limited profit. So it's a strategy. I personally never use it alone, but it's a basic building block for many other more advanced strategies. So let's take a look. So if you haven't liked this video, make sure to like it. That will help our YouTube channel tremendously. And we also have www.moneypigtrading.com with a lot of more tutorial information and Discord community. Feel free to check it out. We're also on Twitter, YouTube, and Instagram on MoneyPigTrading. Feel free to follow to get the latest contents. And also, we actually put this tutorial and the relative YouTube links on our website, moneypigtrading.com/tutorials. And basically, you can just follow this page if you want to go through any jump between different option tutorials that hopefully can help a little bit. So just really quick, what are options? We mentioned in the previous videos, basically that's the right to buy or sell an underlying asset, which can be stock or a cryptocurrency, at a predetermined price before the option expiration date. So in the last video, and the link will be on the upper right corner, the long call option is basically an option that bets on the underlying stocks going up. And basically it has a limited revenues, because as long as the stock price or cryptocurrency price continue to go up, your option price will continue to go up. The max loss is 100%. You will lose 100% of whatever you put into these call options when the stock or the cryptocurrency price drop. On the other hand, long put option is an option strategy that bets on the underlying stocks or assets going down. So looking at this chart again, the stock price now is reversed. So your profits will be maximized when the stock price drop all the way until zero. So it's kind of unlimited. And your max loss again is 100%. So that means if the stock price continue to go up, you're going to lose 100% of your put option. The other question now that we're going to talk about in this video is, can you sell those options, right? Sell call or sell put option? The answer is yes, but the risk is actually unlimited. And trading is actually all about risk control. So using this strategy, you have to be very careful. And a lot of people actually reach out like, hey, I have $1,000 to start with. How much can I make? And that's actually not the completed question. The right question to ask is, how much risk would you willing to take? So then we can better estimate how much you can make, right? Because basically when you have a limited risk, your returns can be unlimited as well. You can be very conservative, but make 10% a year in your account, then you're going to make $100 a year. But you can take a way larger risk and grow your account way faster, right? So it's all about risk-reward ratio, how much risk you want to take. And sell call option here, basically back to the topic, is an option strategy that bets on the underlying stock going down. So it's compared to the long call options. Here you sell the call options and betting on the underlying assets going down. So let's take a look at the price diagram again. So basically here, if you do sell call, let's take sell a stock XYZ January 1st, 1900. Of course, it's a fake date. 92 called at $2 per contract. So what it means is, when you sell this call contract, you have an obligation to sell the asset at $92. So the higher the stock price or the cryptocurrency price go up from here, the larger your sell loss will be, and your loss will be unlimited. Let's take a look. When the stock or a cryptocurrency price is traded at $100, when you own this sell call options, you have the obligation to sell this asset at $92. So that means you're going to lose. You pay $2 for this contract, so you kind of have a buffer. Break evens at 94 because the strike price at 92, right? Plus 2 is your break even 94. And if this underlying asset go to 100 minus 94, you're going to lose $6. And since your base is $2, you pretty much lost like what, 300%. And as long as this asset is at or below your option strike price, here is $92, your sell call option will have maximum profit, and it will flat over there from now on. So even the stock price dropped to like $80, your max profit will still be $2 in this case. So basically the max loss for the sell call option is unlimited, while the max gains over here is again at the option strike price or below the option strike price. On the other hand, for the sell put options is an option that bets on the underlying stocks going up. So let's take a look at the price diagram again. So here we use another opposite example. We sell this XYZ asset at 98 puts at $2 per contract. So that means you have obligation, if you own this option, you have the obligation to buy this asset at $98. So let's take a look. So when the price quickly drop, pretty much the reverse of the sell call options. When the price quickly drop, your sell put is going to lose money with unlimited loss, right? Because your break even is at $96 since you pay $2 per contract with a strike price of 98. 98 minus 2 is 96. That will be your break even point. If the stock price go below that, you're going to unlimited loss, right? Because you have the obligation to buy the asset at $98 while this asset now is trading at $90. And because you have $2 of buffer from this option, 98 minus 2 equal to 96. 96 minus 90 equal to 6. That means you're going to lose $6 per contract. That's minus 300% loss. For you to make profits is if the stock price is traded above $96. That's a break-even point, and your profit will be maximized if this underlying asset is traded at 98 or above. So in this case, if this underlying asset is at 98 or $100, your option price will be worth $2. So you're going to make 100% basically. So basically, the sell put option here, the max loss is unlimited, while the max gains here is an underlying asset above or at the strike price. So this sell option strategy is better traded together with other contracts or stocks because you have limited profits while unlimited loss. That doesn't make a lot of sense, right? But it's actually a very basic building block for many other strategies. Like in the previous video, we discussed about long calls and long puts. And together with sell calls and sell puts, we're going to be able to construct what we call vertical spread. And by having two vertical spread, we're going to have butterfly spread, iron condors, etc. So it's actually a very important concept that you should understand. And if you want to see how to buy or sell options in thinkorswim, we actually have a video. The link's on the upper right corner. Feel free to check it out. I just want to highlight on our Discord community, we have a pretty strong swing trading program which focuses on options. Really good winning rates and average return per trade, as you can see. We also have a benchmarking account with a small account, 1,500 back to early May 2021. As July 9, 2021, is traded at almost $20,000. That's 1,250% gain. If you're interested in the Discord community, make sure to check us out on www.moneypigtrading.com. And thank you for watching. See you guys next time. Bye-bye.